Okay, guys, welcome to the Bet Out of Debt show. I'm your host, Troy Johnson. I have a resident accountant for a prestigious accounting firm in Los Angeles, Patrick Doherty. We call him Super P. And then I have our resident crypto investor, Tremaine Palms. Welcome to the show today, guys.
Pleasure to be back.
And it's always a pleasure.
Hey guys, today we're going to talk about something that's near and dear to my heart, and that is option trading and option buying. And in particular, we'll talk about volatility, implied volatility, and how does that play into purchasing stock. So if you looked at some of my previous trades and our previous shows, you see that I have done some long-term leaps and some short-term trade positions. And in buying those, there's two different things that I look at. One is the underlying stock price and the stock being on the bottom, the second deviation bottom on the Bollinger Band. But what I do not often talk about is volatility and how does that play into the price of the option contract. So today I want to show you and talk to you guys about why implied volatility and volatility is so important. And how do you know if you're buying high vol or low vol? Because if you have high volatility in an option contract, even though it's on the second deviation, but the volatility high, theory says when you read books, you should be selling options, not buying options. Mm-hmm. And if you have a low volatility, even on the bottom second deviation, you should be buying. So obviously I'm buying because implied volatility is low. So how do I know that implied volatility is low? Well, one indicator is the Bollinger Band. If the Bollinger Band is wide, that's the indication that implied volatility is high. Shouldn't be buying. Implied volatility is low when the Bollinger Band is small. So I'm looking at the width of the Bollinger Band, and we have studies that you can put onto your charts to show you that, and you can visually see it. But the other thing is a thing called Implied Volatility Rank. And what it does is it tells you where implied volatility is over where it has been over a 52-week period. So let me go and show you something. And then if you guys have some questions, please ask. But as you can tell, I'm really excited about this. This is a really important topic. So did that make sense what I said so far?
Absolutely.
Yes.
Okay.
Yes.
Okay. So again, guys, as I showed on my initial video with my trading plan, I'm a big fan of barchart.com. Some YouTubers out there. There are a number of YouTubers that use bar chart. And so I use it. I think it's almost a one-stop shop for everything as it comes to option trading. So if you go to options here on barchart.com and click here, you can go click IV rank and IV percentile. And so let me get rid of this. And this is a free account. You can have a paid account, but right now I have a free account. I'm planning at some point to upgrade to a paid account because I find this information on this website so important. But let's look at, let's say if I was going to do a trade on Apple here, right? And again, guys, we're under the options section in barchart.com. And we clicked on this. Just a recap. And so here you can look at the underlying stock that we would do the option contract on and how much it's changed. But what's important is the implied volatility, the IV percentage, and the IV rank. Okay. So here is so oftentimes when we go to buy an option, it says, this is the implied volatility. It's 44.54%. And we go, that sounds high, or that sounds low, or I don't know what that means. That's the right answer. because you have to put that 44.54% in context of where it has been over the last 52 weeks to know if it's high or low. And so that's what the IV rank does. The IV rank says over the last 52 weeks, this is like 21, this implied volatility is 21% from its highest point it's been over the last year. So that tells me that the implied volatility is relatively low. So I should be buying, not selling. So if this IV rank was around 1 or 2 and for just scale, the IV rank goes from 0% to 100%. So 0%, if this was 44.54 and the IV rank was 0% or 1%, then this 44 would be the lowest it has been, the implied volatility has been all year. If this was 100% IV rank, this 44.54 would be the highest implied volatility that the option contract has been all year. So that's how I determine if I'm buying high or low implied volatility. And then you can see what the implied volatility high has been over the year right here. Can you guys see that?
I can see that.
It's 125%. So if you were to do the math here, you would see that would come out to 21%. This is way off from the high. So I would look at this and look at Apple, and then I do an option contract, looking at the Bollinger Band small, looking at the IV rank, and I would say, yeah, this is a good buy if the price of the option contract looks good. So that's implied volatility and implied volatility rank, and why you need to look at implied volatility and understand where it ranks over a 52-week period. Hopefully that makes sense to you guys. Do you have any questions?
Well, I'd just like to add to that, Sleepy. I think it's a tool that is certainly worthy of new investors as well as seasoned investors, if in fact they're not aware of this particular strategy and information. And so, just to sum up what you said, when you go back and you look at the rank and you look at the implied volatility, looking at the chart gives you so much data and information, which is now why it appears that this is where you get a lot of your conviction when you go into your contract trades. Would that be safe to say?
Absolutely, absolutely. Because if I see a great price on an option, I need to make sure that implied volatility is working in my favor when I'm purchasing.
Yeah.
So
I have a question.
Because option contracts, again, guys, are based on two factors: the price of the underlying stock, meaning Apple,
okay,
and also the implied volatility. Is it high or low? And those two makes up the components of an option contract. So knowing that the implied volatility historically over the 52 weeks is at 21% tells me it's on the lower side, and I'm buying the lower side of volatility. And you cannot see volatility, guys.
Right. Yes.
You don't know unless you rank it over where it has been. You can see that volatility has been as high as 125. So I'm buying low vol. And again, rule is sell high vol, buy low vol. What was your question, Super?
Yes. So is this these rankings, is that for a specific option in the option chain, or is that for the overall option chain?
Overall option chain. And then as you go into a specific expiration, they'll have the equivalent metrics. They'll have the implied vol and the IV rank for that particular expiration. This is at the top of the chain. This is overall.
Okay, so for example, if say, I'm just making a fictitious option here. Let's just say I wanted to take a look at a leap, maybe a January or May 2022 leap.
2022, okay.
Yeah, and would those metrics you'd be able to measure that metric
Absolutely.
for that particular leap?
Yeah, absolutely. You will have an implied volatility. It could be at 80% implied volatility. But then when you look at the IV rank may say you at 19% or 10%.
Mm.
That means you're pretty low, even at 80% implied volatility based on a 52-week oscillation of where it's been over that period. And so again, you have to know just knowing implied volatility without knowing its rank, you just have a number. It's not contextualized to anything. There's no contextualization to any endpoint. You're just out on the field. You don't know if you're on the, you're just out on the field. You don't know where the end zone is.
That's a very, very powerful tool.
So it is, and there's multiple places where you can get IV rank. So Super, we were talking earlier in the week, you were talking about buying a leap, and I asked you, okay, what's the implied volatility? You give me the implied volatility number, but then I asked, well, where is it in rank? Is it near the bottom?
Dumbfounded.
Or near the top? You were like, I don't know.
I would admit I was dumbfounded.
Yeah, you were like, well, what's IV rank? So when we're talking about options and all of this stuff on our channel, and there's multiple places to get this, guys. I use bar chart, but I mean, you can get these. You can YouTube more information on this type of stuff. But that's it. That's pretty much it, guys. I wanted to share that. And I hope that helped you guys kind of understand implied volatility, rank,
that's fabulous.
And how implied volatility plays into option contracts. And I just hope that was helpful. Was that helpful? Any additional questions?
Yeah, I think it was very, very well pointed out, well thought out, and well described. Here's the question that I have to our audience that are not able to just join in, and perhaps they'll go down in the chat below and they can ask additional questions. But I want to say this for our audience. They may be asking the question, Sleepy. Now you're talking about stock options. Is this applicable to just stocks in and of themselves? They're just getting started in stocks. Does this particular strategy works with stocks alone?
Yeah, implied volatility absolutely works with stocks too. We're not talking about, I'm not specifically talking about it and what I'm doing with these options. But implied volatility gives the implied move of a stock over the course of a year, and at one standard deviation, just talking, real technical terms. And you can YouTube all of this stuff, guys. It's not that difficult.
And may I add in?
Yeah.
So if one studies price patterns in stocks, the underlying stocks themselves, you might be able to determine when a stock is ready to break out. Once you might see the volatility expand and the IV rank expand some.
Yep. But Super, just in terms of implied volatility, just the basic, it gives the expected move of a stock up and down at one standard deviation over the course of a year. You can take that down to a weekly move, depending on looking at the option chain. And implied volatility at a stock level, not talking option level, it gives you the implied move percentage-wise, what the market thinks the stock is going to do. So that's the answer to your question. I don't want to get into the nuts and bolts and nitty-gritty details, but there's a lot of places you can go to get more details, but it does apply to stocks too, if you want to take it to that level. Do you need to take it to that level? No. I made a lot of money not taking it to that level. I'm teaching my kids how to, invest, but with them, I'm taking it to that level because they're young. So, any other questions before we wrap it up?
Yes, Sleepy. You made the or you showed the illustration, excuse me, on the bar chart to go up to the option section. Just for the sake of our audience, would that actually be, and I'm still talking about just stocks at this point, instead of clicking the options, would they click the stocks so that they could go in and get the same information?
Yeah, that information is in the options. So you have to really look at the options for that stock to get that info. You do not click on a stock and get that info.
Gotcha.
So you go to the option, you look at what the option implied volatility is, and then you bring that knowledge back to the stock to say, this is the expected move of the stock.
Very good. Love it.
Yeah, so that's how that works. Yeah, you really have to have some level of option knowledge, because options, these option contracts, they're based on stocks. So they play hand in hand. So again, an option contract, the price of the option contract is based on the underlying stock and the volatility. And so those two dictates the price action for an option contract. So anything else before we wrap up?
No, I'm good. I think you did a wonderful job in the presentation.
Did that make sense to you, Super, what I just explained? I went through a lot of stuff very quickly.
No,
But-
no, I understand because obviously, as you were saying, the option is based on the underlying stock and movement of the underlying stock, which would be the delta if you're into the Greeks, and the implied volatility, which would be the theta if you're again follow the Greeks. And obviously, if the implied volatility is high, then you don't want to buy the option. If it's implied volatility and the IV rank is low, then that's a possible good trading opportunity.
Yeah, guys. And so if you like what you heard today, as always, get the likes up, subscribe. We'll be bringing more content around the options and crypto space and underlying stocks. I think Super P is going to focus more on the underlying stocks. I'm really digging into and really excited about the option space. And then Mr. Palms, you're a crypto guy.
We look forward to it.
Absolutely. So if you guys like what you see and you would like to follow us and you find this stuff that we shared today interesting, please share your comments. Please like the channel and subscribe. And as always, keep investing, and we'll see you next time. Thank you.
See y'all next week.